Welcome back to the AlgoBot channel, where we break down automated trading strategies for MetaTrader 5. I'm your host at AlgoBot, and today we're studying an expert advisor called Price Impact Conviction Trend. This one is built on a fascinating and slightly counterintuitive idea from market microstructure, the price-impact ratio, sometimes called illiquidity. By the end of this video, you'll understand how the strategy measures the cost of a move in terms of volume, how it separates genuine, absorbed flow from thin air pockets, and how it aims to ride trends with conviction. This is educational content only, so let's dive in. So what exactly does this expert advisor do? At its heart, Price Impact Conviction Trend is a trend continuation strategy. It doesn't try to pick tops and bottoms, and it doesn't fade strong moves. Instead, it waits for the market to show its hand with a bar that combines a large directional move and heavy participation, and then it looks to ride in that same direction. The engine behind it is Amihud's price-impact ratio. In plain terms, impact measures how many units of price movement each unit of volume produced on a given bar. It's the return per unit of volume, not the raw volume itself, and that distinction is the entire idea. A big price move on thin volume produces a high-impact reading. The market couldn't absorb real flow, so the move is a kind of liquidity air pocket that often snaps back. A big price move on heavy volume produces a low-impact reading. Real participants transacted into the move, and it barely cost them anything per unit. That second type is the absorbed, informed flow the strategy is interested in, because that's the kind of move that tends to continue. The strategy pairs this impact ratio with an exponential moving average baseline that keeps every entry on the correct side of the prevailing trend, and an average true range measure that sizes the protective stop and the target. Because the trigger is normalized by volume, it self-scales. The same settings can read a quiet hour on a major currency pair and a wild hour on gold on the same footing. Who is this style suited to in an educational sense? It's designed for traders who are curious about market microstructure and who prefer patient, trend-aligned continuation entries over rapid counter-trend scalping. It runs on a single time frame, whichever chart you attach it to, and it manages just one position at a time. Remember, this is educational information, not a recommendation. Let's walk through the exact logic, step by step. The expert advisor works only on completed bars. Once a bar closes, it becomes the trigger bar, and the strategy evaluates three conditions on it. The first condition is a significant directional move. The strategy measures the sign displacement of the trigger bar, simply its close minus the previous close, and checks whether the absolute size of that move is at least the thrust factor multiplied by the current average true range. By default, the thrust factor is 0.9, so the move must be about 9/10 of an ATR or larger. This filters out ordinary background noise and keeps only decisive bars. The second condition is low price impact. The strategy computes the impact ratio of the trigger bar, the absolute displacement divided by that bar's tick volume, and compares it to the average impact over the look-back window, which defaults to 20 bars. The trigger bar's impact must be at or below the impact factor times that average, and the default impact factor is 0.85. In other words, the move has to be efficiently absorbed by volume, not a thin spike. The third condition is trend agreement. For a long, the close must sit above the EMA baseline, whose default period is 50. For a short, the close must sit below it. Direction comes purely from the sign of the displacement, so the system is fully symmetric. It treats up moves and down moves the same way. When all three line up, a big thrust, low impact, and trend agreement, the strategy signals an entry. A long entry is placed at the ask, a short entry at the bid. Before any fresh entry, a spread filter checks that the spread is not wider than the max spread point setting, which defaults to 30 points. Risk control is handled with the average true range. The stop is placed at the stop multiplier, 2 by default, times ATR away from entry, and the target sits at the take profit multiplier, 3 by default, times ATR away. That's a 3-to-2 reward to risk shape as a backstop. Exits are just as important. If a position is open, the strategy abandons the ride the moment price closes back on the wrong side of the EMA baseline, meaning structure has broken, or when a fresh opposite conviction bar appears. The ATR stop and target guard everything else. And only one position per magic number is ever held at a time. Now let's look at the actual MetaQuotes language code that runs inside the expert advisor. At the top, you can see the input parameters. Impact period, defaulting to 20, is the rolling window for the normal impact baseline. Impact factor, at 0.85, is the gate that the trigger bar's impact must stay at or below. Thrust factor, at 0.9, sets how large the displacement must be relative to ATR. Baseline period, 50, defines the EMA that acts as both the trend gate and the structural exit. Then we have the ATR period, the stop and target multipliers, the maximum spread, the lot size, and the magic number. Below the inputs is the heart of the logic. The Boolean big thrust checks that the absolute displacement is at least the thrust factor times ATR. The Boolean low impact checks that the current impact is at or below the impact factor times the average impact. The long signal requires big thrust, low impact, a positive displacement, and a close above the EMA. The short signal is the mirror image, big thrust, low impact, a negative displacement, and a close below the EMA. When the long signal is true, the code reads the ask price as the entry, sets the stop one stop distance below and the target one target distance above, and calls trade.buy with the lot size and those levels. When the short signal is true instead, it reads the bid price as the entry, sets the stop above and the target below, and calls trade.sell. Both sides use the same ATR-based distances, so the risk framing is symmetric. That's the complete decision, expressed in just a handful of lines. Let's bring this to life on the chart. On the price panel, you can see the candles with the EMA baseline drawn through them. And in the subpanel below, we're plotting the price impact reading as a percentage of its recent average. The dashed line at 85% is the impact gate. Readings below it mean the move was efficiently absorbed by volume, which is exactly what this strategy is looking for. Look at the first few candles on the left. Price is drifting sideways, sitting just around the EMA baseline, and the impact reading is hovering near 100%, completely ordinary. There's no large directional move and nothing has been absorbed, so the strategy simply waits. Now watch the fourth candle. Price pushes up in a large bullish bar that closes well above the EMA baseline. That's our big thrust. The displacement is comfortably larger than the thrust factor times ATR. And crucially, look down at the subpanel. The impact reading collapses far below the 85% gate. A move that large, on impact that low, tells us heavy volume absorbed the push rather than a thin spike lifting it. All three conditions align: big thrust, low impact, and a close above the trend baseline. So the strategy signals along, and the buy entry marker appears on that candle. From there, the position rides the trend. The next candles continue higher, each one holding above the EMA baseline, so the structural exit is never touched. Price keeps extending until it reaches the take profit marker, where the average true range target, 3 times ATR, backstops the move and the long trade is closed at the target. Notice how the impact reading has climbed back up by this point, telling us the well-absorbed part of the move is finished. Now the character of the market changes. After the peak, price rolls over and begins pressing back down toward the EMA baseline. A couple of candles later, price closes below the baseline. Structure has flipped. The strategy is now only interested in shorts. Watch the 11th candle. Price drops in a large bearish bar that closes well beneath the EMA baseline. Again, that's a genuine thrust. The displacement clears the thrust factor times ATR requirement. And once more, the impact reading in the subpanel plunges below the 85% gate, telling us this decline was met with real, absorbing volume rather than a thin, hollow drop. Big thrust, low impact, and a close below the baseline. The mirror image of our earlier setup, so the strategy signals a short, and the sell entry marker prints. The short then rides the down leg. Each following candle makes a fresh low and stays below the EMA baseline, so the trend follow continues undisturbed. Price extends lower until it reaches the second take profit marker, where the ATR target backstops the runaway leg and the short trade is closed. Step back and notice the symmetry. In both trades, the strategy did the same 3 things. It demanded a large directional move. It insisted that move be efficiently absorbed by volume, a low impact reading, and it required agreement with the EMA baseline, so it was always riding the trend rather than working against it. The impact ratio is what separates this from a naive volume surge system. A thin air pocket bar might look dramatic on raw price alone, but its high impact reading would keep this strategy out. And on every trade, the ATR stop sits on the other side of the entry to cap the loss if the move fails to follow through, because in real trading, some of them will. That brings us to the end of our breakdown of the Price Impact Conviction Trend Expert Advisor. Today we explored Amihud's price impact ratio and the counterintuitive idea that a big move on heavy volume, a low impact reading, is the kind of absorbed, informed flow that tends to continue. We walked through the three conditions for a conviction bar: the EMA baseline trend gate, the structural and opposite signal exits, and the ATR-based stop and target. Remember, everything in this video is educational information only and is not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do happen. If you found this analysis helpful, please like the video, leave a comment, and subscribe for more MT5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.